Futures higher as ECB President Mario Draghi says they will do whatever it takes to preserve the euro. Facebook reports its first ever quarterly earnings after the bell. I'm Taylor Schranz, and the morning call starts right now.
Good morning. I'm Scott Rudd, the Chief Strategic Officer at T3Live.com.
And I'm Jill Malandrina with The Street, and together we bring you the morning call. Scott, buckle up. It's going to be fun today. We get on the train. We're down 5 handles, getting to the office. We're up 15 on European headlines. There's so many traders and PMs that we talk to that are so frustrated with this tape because it's really hard to trade here.
Well, as of yesterday, everything looked very ugly. I saw a lot of high momentum names, all broken. That ascending channel that we've been following in the market broke to the downside. Then yesterday we retested it, closed below it. So a lot of guys that were trying to be long probably got out of some of their stock, and guys who were looking to add to their shorts as we were hovering below that line, are in for some pain today. So right now you're almost in a position where it's hard to win. So a lot of people are losing. So the thing you have to do here is lose less if you're not seeing it. So when we do get more clarity, you don't have a lot of money to make back.
So now that we have this bid in the futures, do you suggest going long at this point to kind of catch that momentum, or kind of hang out and let's see how this thing opens and plays out?
Well, you have two different choices. First of all, if you look at the chart of the S&P, if you're short, you have to figure out what your commitment and what your time frame is. We've been following and talking about this ascending channel. We've been following it the whole way up. Here's where we pushed through and failed around 1375. We were a bit oversold yesterday. We were like negative 50, so it was hard to be drastically short. But a lot of guys said, you know what, we're hovering. We back tested this. This trend. We're below it. We're going to continue. We're going to break below this 1329, get through the 200-day. Lo and behold, we're gapping up right into about 1360. So I think if the bears want to have any pressure to continue on this market for future downside, they don't let the market reclaim 1360, because if we do get above, just say 1358 to 1360 and close there, we're right back in this channel. This would have been a false breakdown, the same way you almost had a false breakout right here, and we're in the same monotonous summer trade where you do have some things that you could be long for a few days and some things that you should be short. So it's very stock specific.
Right, which could be fun if you're a stock picker, but it really is tough if you're trying to identify some momentum trades here. And speaking of identifying, moving along to the sector spotlight, what Scott and I try and do during earnings is find some key themes. One of them is in the industrials, where these companies are coming out, they're reporting and beating the quarter, but the concern really lies with outlook. So let's take a look at CAT, which is going to be our first one. Again, beat the number. They're concerned because their growth is so tied to Chinese demand. I know Stephanie and Kramer, they're looking to eat and be over Caterpillar.
Yes, well, if you look at this a few different times, we've tried to play it for a rally, and it's just stuck in this downtrend. I think you had your multiple signs to sell it.
Right.
That's why I kind of hate when a stock has such a huge decline, and then all of a sudden, all these firms start downgraded. They never downgraded near the top. They're always upgrading it and selling it, and at the bottom, they start downgrading. If you look at the chart of Caterpillar, you will see that it's been so battered and bruised, and you had some signs here in this stock to get out well before this happened. I would say even the last sign was when it broke 100, below major support. This is where it broke out from. It should have held this, and it didn't. So now, lo and behold, we're down at around 81. It's following this downtrend. Every time it gets up there, it gets rejected. We're at this lower level here, and it doesn't seem as if it's going to have any traction. He gapped up, I think, yesterday. It was up 3 on the earnings, decent earnings, horrible guidance. So, use this point of reference. If it can't get above 85, I think shorts are going to go after this below 80. And, you go to your real quick monthly chart, and you will see that there is, look at this double top, really big double top. Right here is almost no man's land. So you could see 72 on Caterpillar, if this market, continues to fall apart, which right now we're up 15 handles. So who knows?
Right, who knows? So moving along to Cummins, ticker CMI, this is another one, too, that also slashed its growth estimates last week.
Yes, and this one hasn't really been able to recover. I see a bear flag. I don't see any bounce here yet. You go to the chart, you will see. Look at this. This is friggin' ugly. CMI, name you know. Remember we talk about false breakouts? Well, here you go. False breakout. That means no momentum. That means you sell some. That's a sell signal, or at least say, let me take notice here. And then so if you took notice here and you didn't do anything, you had to take notice or sell or use your stops once it broke this area. Look at this. This was the last time it broke out. It failed. So this was your spot if you were an intermediate trader to get out. That's about over 110. And then look at this move lower. Then you have this huge wide range bar. We talk about commitment to it. Well, look at this. We're in the bottom third. No one's thinking it's cheap here yet. So at this point, this is prone to, get some more downside follow through. I know downside follow through is hard to come by in this market because there's a lack of momentum. But I would say below this, 82.20, anyone looking to get involved or who got involved in this dip area might see further downside. And look at this, we're going to the weekly chart. So it's showing you that these daily charts are going to weekly charts, so that shows you extreme weakness. But meanwhile, the S&P is still only 5% off the high. So right here, we're at a very, very crucial level. Look at this, Joe, sport, bow. Look at that. This breaks 80 bucks. You're in for trouble. So at this point, you could try some here, but just watch this level. That's pretty important.
All the names within this group are like that. And then we're going to take a look at Deere next, which has really been struggling since February. Yes, it's tied to the agricultural sector, which we're going to talk about in the trenches. And clearly, that group has caught a huge bid. But what Deere and these other names rely on are growth. Whereas the ag story is a little bit different because it's more of a supply and demand kind of thing. So again, you're seeing another name like this that's really having a tough time.
Yes, and I don't think it's going to really matter much that we're up 15 handles because it's looking for growth, and there's no growth in the entire world right now.
There's no demand.
There you go. And if you look at this chart, go right back to it. It's the same story here. This is when we look at potent days, and as a technician, you take notice right here. Look at this. I would say, look at this day right here. This day was on what was it, February 15th. It engulfed this entire upper range, this ascending channel to the downside, never was able to take it back, and it's just been trapped to the downside ever since. And now we're coming into, I guess, bigger support here at 70 bucks. This too, if it broke this, you have to go to your weekly chart. Anytime you go to your weekly chart, that means you're looking at lower levels from way back when. And here's a 200-day, it's 69 on the weekly chart. So again, it's working its way here. I think it's in a little bit of no man's land. It's in a void.
And that's why it's so important to pay attention to these charts, because a big theme within this group is tied to Chinese demand. And it's so hard to trust those numbers coming out of there because who knows if they're real, if they're not. And the charts are telling you what is actually happening, what people are thinking. That's why it's so important to kind of, work with the charts and also understand what's going on and how it relates to the sector. Let's wrap it up with Packard, another one where beat the numbers, had a nice little move over the past 2 days, but again, they took down some of their growth estimates because demand is slumping in the truck group.
Right, and same story, same broken charts, trying to hold the daily support, but if it doesn't hold the daily support, you got to go to the weekly support. So you go to this chart. We'll take a look at the daily first. It too, tried to gap up, sold. It's below the 200-day. This is just choppy mayhem. And if you look here again, you never want to sell at a daily support. You'd rather sell when trends change. Here's that ascending channel that broke to the downside. Then it tried to hold in there, couldn't take back much of this decline. Boom, break to the downside again, and now it's trying to hold this lower level. And you have huge support going across. Some value people might say, oh, I want to buy some verse 36. Okay, you could try that, because sometimes these things do wake up, but I don't see any interest here, and I don't see any reversal pattern like we saw in the ags that finally gave you your entries over a month ago, where you didn't have to take some of that pain.
Right. Well, it'll be interesting to see how the industrial story plays out, because if this Q3 is one of those kitchen sink kind of quarters, then it can get really interesting if it breaks either way. So we'll have to definitely keep up on that one. Moving along, we're going to jump into a quick commercial. When we come back, we dive into the trenches.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.
Welcome back to the morning call. We're going to dive into the trenches and take a look at the ag names. We have really been talking about this thoroughly since the end of last year. You guys know my thesis. We know Q1, Q2 is going to be choppy. We played it out with some straddles over on options profits. Now Q3, Q4, despite the drought, this is even before the situation, the worst drought since 1895. came into play. We like these because of relative and historical values, and now the thesis is starting to play out, and we really saw that price action turn around June 4th, basically when we got out of that Mosaic straddle. We're going to kick it off with Mosaic. I still love this one. I think it's going to 65, and there is more room to run, but for you momentum guys, what are you looking at on the charts?
Well, as a momentum player, we like to get involved with a group when they turn, when you see a reversal pattern, and then you see continuation to the reversal pattern. So back here, like you mentioned in June, you saw a major reversal in Mosaic, and that was right here. Okay, we talk about the red dog reversal. Everyone knows I love that strategy, and if I can move this up, you could see it was right here, made new lows, closed above it. You know, if it was a little bit too early for you, too risky, you could have waited to see the commitment above that low and got in right around here when it broke this little trend or broke this horizontal line around 50. And now, I'll be honest, it's looking pretty good. You know, at this point, I would say wait a little bit because, you know, you're at key resistance. The 60 going across, resistance here. It's paused it here. Rightly so, it paused it again, considering where it came from. So at this point, what I think you do is you measure the commitment. And as long as we stay above, just say this 55 area and go sideways and let profit takers come in, you know, I think you'll get another move once it gets back above this pivot point, which to me right now is around 59. Above 59, 59.5. You get your 64 price target at some point before the end of the year.
I mean, even still, like the hedgers are getting really active in these names. Their brokers are taking up their price targets and their estimates. And I know we don't necessarily look at what the brokers are saying for the type of trading that we do here, but for longer term, if you're looking to see where this could potentially go to in the next 2 to 3 months, that's where it becomes really key. Let's move along to CF. This has been a top performer in this space. Over the past 5 years, it's returned 200%, 14% in last month alone. That's just strength.
Well, CF is one of the ones that my traders usually look at because it's showing relative strength. It's above moving averages. It's always one of the candidates to make new highs first. And when this group ignited a few weeks back, you had a nice move off the lows with some of those other ones, but this one actually went to new highs. So you had a nice move if you played it for that rally. And if you look here, this is when it became back in play, when it broke above this like 173, gave you a nice pivot buy here. Then it flagged, showed you a nice little bull flag. I remember talking about it right here, showing you commitment to this, and then you had new highs. So, but the one thing I don't like is I don't like when you break above highs and you come back so quick. That's a little bit of a sell signal, but from 160 to almost 210, you know, why not? So at this particular point, short term, I think you could trade it versus 190. If it starts getting below this low here of 190, 190, 117, you know, you might see a move back down to retest this last breakout area of about 180. But again, short-term support, here's your resistance. At this point, not as compelling, but this has been a leader in this group.
And it's still trading cheap. It's only trading 8.3 times forward earnings, so it looks interesting. Let's move along to Monsanto. Sort of the same situation here where we hit some new highs, came back a little bit. So is this a case where digestion is a little bit healthy and there's another opportunity to get in, or are we looking for, you know, some more support levels to be tested?
I think this one too. This one actually led in front of CF because of the whole corn situation. And now you just had a little bit of a pullback. So if you look here at the chart, you will see from where it bottomed at 70, it followed a nice uptrend all the way to, you know, 88. So here you are following this uptrend, going, you know, alongside it, hugging the 8-day and the 21-day. Now this is when it broke this small downtrend right here above 80, when a lot of momentum guys start to feel comfortable. Here is your last flag pattern, and right now it's still in check. So I would say if you're an intermediate guy and you're not committed to it, watch 84. If it breaks 84 and these things want to come in a little bit, it could come in and test 82. So short term, it's stair-stepping higher, but just be a little bit aware that, you know, every stair-step it goes higher, it's harder to keep going. So, you know, here's the high of the year, here's your trend line. You know, that's what I would be following right there.
Agrium's another name like this as well, too. It reported the quarter. It was the first one of this group to come out, hit a new 52-week high, came in a little bit, but right now, again, another one that's trading real cheap at 9.2 forward.
Yeah, this one, same deal.
Right.
Went to new highs. We don't have to get into all of them, but if you just take a quick look here, you will see. You know, we talk about sell signals as a short-term trader, and here is your small sell signal. Went to a new high, closed below it. This is what we call an outside day. This was a small outside day, you know, at an area that was about, what, 20 points higher than the low. You know, and so you had a nice little pull-in. So at this point, if you didn't chase it up here, I do think you nibble on some, you know, in this 90, 92 area. I'd rather see you buy this pull in. And then if the fertilizers stay in vogue, you'll get new highs here. This is a candidate for that.
Speaking of staying in vogue, before we get to our last stock, potash, I spent a lot of time in Chicago. I spent a lot of time in the grain room working with these guys that are trading the grains, beans, corn. This corn crop is done. It hasn't even self-pollinated itself, meaning there's no corn in the corn. It's going to be interesting. This is going to turn out to be a 2013 story as well, because these farmers have to make up for something somewhere. Not that we like to trade off of bad news like that, but it's something that you have to keep in the back of your mind.
Self-pollinate. You're getting really into the analyst thing.
Something.
Self-pollinating the corn.
That's what it means. There's no corn in the corn. Let's wrap it up with potash. This is another one just printed this morning. Headline number was 60 cents. You take out the one-time charge. It actually came in at $1.01. So we have to make sure we're looking at the numbers correctly. As you know, it's only down about 2% at this point, and I think that'll probably be the worst that you see today with it.
Well, typically these ags they buy the bad news because there's always usually a lot of it before they get going, and this might be the same type of thing. So my guys will probably look at it and say, you know what, let's see if we see a diversion. We could buy it in the hole, and sometimes it gets going. So if you look here at the chart, I would say if there's any chance for this to reverse, it's got to hold this 43. So I think it's 43 and a quarter, 43 half right now. I think you try it versus it, let it put a quick 15-minute low in, trade it versus that low. If it goes positive, I think it's in the game. That'll keep this upper channel intact. And then at some point, again, these ags get another move. Here's your pivot area. Nice little trade off the low. This one's been lagging the rest of the group all year. Like it really has been lagging, but we all know POT can get going when it wants to. So you have a significant trend line coming in here. So as long as it goes sideways here, this could be resolved to the upside. So this will be on my radar.
All right, let's move along to quick hits or some quick cash. We have to take a look at Apple. They just reported on Tuesday. Disappointing, second quarter in a row. Has it digested that news well, do you think, at this point? Or
I think it could have been worse yesterday. Yesterday it opened to hit a low of 570, a high of 580. It ranged out close smack in the middle of the range. Right. So there was indecision saying, you know what, do I need to be in a rush to buy Apple considering next quarter might not be so great? I know as a trader yesterday, I felt like some people call traders momentum monkeys at times. Yesterday they could have given me a banana because I was shorting 570s and I was buying 580s and we closed at 575. Right. It wasn't good, but anyway.
But 560 was a real key level that you guys were looking at in terms of support, and it never breached that.
Yeah, well, it went to 565 after hours and then held. So if you look at the chart now, these are your next points of reference. Here's your doji. This is where it closed. Yesterday's high was right here at 580, which we gave a roadmap yesterday. It played in perfectly. But here's 580, gets above 580. It could try and fill some of the gap. I do think above 580, holding it, you have room to about 587-ish, and then maybe even 594. If this gap holds in steady, you have the low from yesterday, which is 570. If it breaks below 570, you then have your 565, and then you have this 548, and then there's that low that was put in back at 528. So right now, this is your small little intermediate roadmap above 580. Sometimes they do a push through failure. If you're going to be in it above 580, stay there only if it stays above 580.
All right, let's move along to JCPenney. I cannot wait to talk about this one. It jumped around 2 o'clock yesterday, up 5%. Everyone was wondering what happened here. Who's getting in, out, Einhorn, Ackman, whatever. This all took place because of a tweet, because of, I think Nina Garcia is her name. She's some sort of major fashion consultant or whatever it is. Because she put out a tweet, the stock moved on this, and at the end of the day, we find out that she's actually a paid consultant for the company. That is how maniacal this market is right now, that stocks are moving on a tweet by a paid consultant.
Well, it just shows you summer, thin, low volume trading. Yep. So at this point, but there's also a huge short interest in JCPenney, so anything can get it going.
There was opportunity there. It's just what it says for the overall market was.
And I think Stephanie says down here it's more of an opportunity also in JCPenney, and I think the same thing. The other day it got downgraded. I'm like, really?
Really?
I'm like, going to downgrade it now, just like everyone's downgrading Zynga at friggin' $3 and they're upgrading it to $15. But anyway, you go to the chart of JCPenney, so 42, everyone loved it, and then everyone hates it down here at 20. So it got downgraded earlier in the week, didn't go down, so that got shorts nervous. And then all of a sudden you start to break above this descending channel. People buy and ask questions later. They didn't really know. So if you take a closer look here, I do think that it can continue to keep working to the upside. If you're a momentum guy, I think as long as it stays above this area here, what was this zone? This is 2150. As long as it stays above 2150, I think it can go higher. I think that at this point it's a laggard, low tier trade for cash flow, and I do think that you could probably get a move back to at least 25 half before you have to start worrying about whether or not sellers come back in.
All right. Good luck on that one. I don't know. I don't see any near-term catalyst. But anyway, let's wrap it up with 2 macro ETFs. We haven't taken a look at these in a while, but let's check out USO. We haven't looked at the oil trade in a while.
Well, oil's been holding higher, right? It had a big move off the lows, below 80, went as high as what, like 91, 92, and now it's been hovering around 88. So if you look at the chart of USO, it's such a hard chart to look at because it doesn't really relate as much. But here you are. This was the move off the low. It's been holding a bit higher above the moving averages. As far as this little area, it's above 33.50. It fills the gap and it can continue. I'm not really trading oil. I'm just watching oil. But I think the next one you want to talk about is something that people have had some success with finally the past few days.
GLD.
There you go.
There you go.
GLD gold. Every gold bug in the world has been bugging out because they don't understand why gold is $400 off the highs and it's out of play. And I've tried it so many times and it hasn't worked. Then finally on Tuesday, I tweeted about it. I'm like, you know what? I'm like, euro's going down. Gold's hanging in there, something to look at in this tight pattern. Then yesterday you had a gap up. We talked about it staying above 155, which I thought was pretty important yesterday. And because look at this tight little pattern. We love tight patterns because it gives you points of entry. So finally gapped up and held it, okay? And then, the problem is every time that's done that, it's failed at this more intermediate trend line.
And then the ECB comes out with headlines.
Well, I guess somebody knew something, right? So at this particular point, you know what? I think it was a 157 pre-market. You have very big resistance here. Everyone's like, has gold turned the corner? Has it changed? I think for it to turn the corner, it's got to really get above like this 158 with authority, not like a little day like this. I'm talking like a big day. Like look how big this was to the downside. That wound up controlling the movement all the way lower. You need a powerful move through this trend line to 159. Wake it up, squeeze those shorts, and get it back in motion because it's been a decent move, from the highs all the way back here, and it makes sense for it to go. But I think just gold doesn't have a thesis.
Right.
It doesn't have an identity. People don't know why people are buying it. Is it because the euro is going to break up? Is it because of its inflation? Is it because of safety? So at this point, I've traded gold when it's a lot easier, and right now it's just a bit harder.
All right, guys, buckle up. It's going to be a fun one today. Catch Scott at the end of the day as he wraps up the charts on T3Live.com, real money and options profits.